All right, in Chapter 2, we're going to cover principles of accounting for and financial reporting for state and local governments. And in this chapter, we want to be able to explain the nature of there's three major activities of state and local government. There's governmental activities, business type activities, and fiduciary activities. And as part of the components of GASB's integrated and reporting model, we're going to cover the definitions of fund, principles of fund accounting, which is a good bit different than what you're used to. Not too bad. The types of funds in each category, and of course talk about major fund accounting.
Okay, in this chapter, as I mentioned, we're going to go over the three different activities of government. There's governmental activities, business type activities, and fiduciary activities. Basically, all the funds we're going to talk about are all fit into one of these three categories. All right, first thing we'll cover is the definition of a fund. And this definition is good whether you're talking about a nonprofit or a governmental entity. Nonprofits, they have to segregate resources, as you see down there in the definition where it says segregates financial resources, liabilities payable, fund from fund resources and fund equities, and to attain objectives specified. And so that's kind of the purpose of a fund, is to set aside resources that have a specific purpose, a specific restriction, whether it's legal in the governmental world or whether it's donor imposed in the nonprofit world. And so the thing to understand about a fund is basically it's like a bunch of mini companies sitting side by side. Each silo has its own cash accounts, its own receivable accounts, its own retained earnings or net assets or fund balance in the governmental / nonprofit world. And so it has its own general journal, own general ledger. A lot of times you can print, like in the nonprofit world, in our software, you can print a ledger that includes all transactions, but it'll just have different designations in the fund column, where at any given time you could filter that report or filter inside your accounting software where it only runs that fund's transactions.
Now we're going to cover the categories and the types of funds. Governmental funds, there's 5 types, and we'll cover those in chapters 3 through 6. There's general fund, special revenue funds, capital projects funds, debt service funds, and permanent funds. Proprietary funds, there's 2 types, and we'll cover those in chapter 7. There's internal service funds and enterprise funds. And fiduciary funds, there's 4 types that we'll cover in chapter 8. Agency, investment trust, private purpose, pension, and other employee benefits. Okay, first I want to cover some of the common characteristics of governmental funds. They have a focus on current inflows and outflows of financial resources. And so therefore the balance sheet is only going to report on current assets, current liabilities, and fund balances, which is current assets minus current liabilities. There's no long-term assets or liabilities reported in the governmental funds. And governmental accounting also uses, this is where things get a little different, use a modified accrual basis of accounting. And what that generally means is that revenues are recorded, or inflows are only recorded when they're measurable and available to pay current expenses. Expenditures, and notice that expenditures, not expenses, it's the cost of an item. It's an expense is the amount of a cost used up or consumed during the period. We'll get more in depth on that later on. But expenditures are accounted for under the modified accrual basis when they are payable using current financial resources.
The main governmental fund that every government has is the general fund. There's only one per government. This is going to be one that you're going to cover in Module 2 of the Smithville application, Module 3, as well as Module 4, and that'll be it. The rest of them will be these other fund types I'm going to tell you about. But 2, 3, and 4, you're going to set up the initial balances for the town for the city in Module 2. You're going to record the budget in Module 3, and in Module 4, you're going to do a lot more transactions of just regular operations, and that's indicative of the final bullet point here about most financial transactions that relate to just general government operating activities are recorded in the general fund. If it's not tied to something specific, like a capital project, a large capital project, a debt service for given bonds, something like that, or collecting money for other governmental agencies like a tax agency fund, just general operations, it's the general fund. Okay, another type of governmental fund is a special revenue fund. These are used when the city wants to add kind of an extra layer of accountability, and when there's resources that are restricted for a specified purpose, like maintenance of roads, operation of libraries, stormwater management, something like that. The accounting and budgeting for the special revenue fund is the same as for the general fund.
General fund. Debt service funds. These are these account for financial resources that are set aside to pay for principal and interest on long-term liabilities. Again, this is kind of where what we said was excluded from the general fund is put in the debt service fund.
Capital projects funds are another example of a governmental fund. It's another one of the types. These are used to account for financial resources that are set aside to purchase long-lived capital assets, like the new Raiders Stadium that you see below in Las Vegas, which doesn't exist yet, but there's been a capital project fund established for it. Looks pretty nice, looks pretty expensive. But yeah, if there's little short-term, small assets that you might consider a fixed asset because it has a useful life longer than a year on the financial, for-profit side, a lot of those are going to be accounted for in the general fund if it's used for general operations, or a special revenue fund, or one of those other side things. But a large capital project that's going to have a long life, that's what the capital projects fund's used for.
Permanent funds operate sort of like a trust. They are they're similar to a permanently restricted fund in the nonprofit world, or kind of like an endowment where the principal is not spendable, but the earnings on the principal are used to support a public purpose, like provide art for public buildings or purchase books for a library, etc. Here's a little short thing that we'll cover more about later, but there's a dual effect whenever you have a transaction for a capital project. In this example, city issues a 3-year 5% note in the amount of $400,000 to purchase a building. You have to record the issuance of the note in both the general fund and the governmental activities general journal. And governmental activities, here's where we're talking about this whole dual track of accounting, where you are reporting in two places. Where you're recording a transaction in two places. Not all transactions will have to be recorded in two places. But especially those related to budgets. You'll notice that later on we cover. But here's where we're going to record this both. In the general fund, you've got 400 debit cash for 400,000 and credit other financing sources. Again, hung up on this, we're going to cover it later. Then you have to record it in the governmental activities, a government-wide journal. Debit, cash, credit, notes payable. You'll notice a lot of these governmental activities in the government-wide journal is going to look a lot like what you're used to. It's the general fund and these governmental funds and proprietary funds that are going to look different in terms of the accounts that you're debiting and crediting.
So again, we're going to demonstrate kind of the dual effect here that you're going to see over and over again throughout the Smithville application. And while I'm on that note, let me just tell you there's two ways you can do that. One, you can do all your normal entries for these governmental funds throughout the semester, and then in your proprietary fund and your tax agency fund, you can do those in modules 2 through 8, and then you can go back in module 9 and record all these various transactions in the governmental activities government-wide journal, or you can do them as you go. That's the way I recommend, because a lot of times when you're going through the questions, it's going to tell you, it's going to kind of give you some hints about where you're, how you're going to record this in the general fund, and also that you need to record it in the governmental activities fund. Otherwise, you're going to have to just go back question by question all at once at the end, and but either way is fine. And I'll even tell you about in the later modules. Some governments, they don't even do a government-wide entry every time. They just kind of do one reconciliation at the end of a given accounting period to reconcile, to kind of turn whatever balances they have into what are governmental activities, government-wide statements, financial statements require them to be. Kind of like we do here at the foundation, we go all year as cash basis, and then when it comes time to prepare our GAAP financial statements, we just kind of record a bunch of accrual entries to turn it into an accrual-based financial statement. Anyway, these transactions, again, illustrating the dual effect of the transaction. So you buy a building kind of for general operations. In the general fund, you're looking at a debit to expenditures, which I know is strange to your kind of your for-profit mindset. And credit cash, and crediting cash, cash is always gonna be the same in both sides of a dual effect entry. And so you see down below, governmental activities a lot more familiar to you. You're debiting fixed assets or buildings and crediting cash for $400,000. First type of proprietary fund is internal service funds. These account for activities where goods or services they're provided within the government to other departments. There's some examples of this. It's like central computing, a print plant, at a university like UAB, a police department, a UAB police department, motor pools, and other things like that. These are usually reported as governmental activities in the government-wide statements because they're primarily servicing other funds that are financed by governmental activities or governmental funds. Enterprise funds are another example of what are known as proprietary funds. Now these account for activities and services, goods and services that are provided to the public. Not internal government departments. Water utilities, airports, parking garages, golf courses. Lots of examples there of what are known as enterprise funds. And these are reported as business type activities in the government-wide financial statements. Again, when I keep going back to these government-wide financial statements, the overview of the framework that you go over in Chapter 2 and Module 2 that is included in your in Canvas as a separate video. When I start talking about business type activities versus government activities, um, that's where you're talking about the upper part of that format. I mean, the upper part of that framework video, that framework matrix there. It's talking about the government wide financial statements, which column those appear in, versus the fund financial statements. You'll notice, again, when you view this framework, that there's a crossover. There's the governmental activities, internal service funds are considered governmental activities in the government wide financial statements. But in the separate fund financial statements, they're considered governmental funds. So there's a little bit of an overlap there with internal service funds, but that's not the case here with the enterprise funds. They are considered business type activities in the government wide financial statements, and they're considered proprietary funds, or what you might think of as a business type fund, in the fund financial statements.
Common characteristics that are similar to for-profit entities, including they use accrual basis of accounting. They also record capital assets and long-term liabilities, depreciation expense. They're very similar in all these ways to what you're used to in the for-profit side.
From a financial statement standpoint, you'll recognize all these financial statements that are required. They may go by different names. You've got a statement of net position, which is like a balance sheet, statement of revenues, expenses, and changes in net position, basically an income statement. And then you've also got a statement of cash flows.
Fiduciary funds, these are agency funds. These account for financial resources where the government is just strictly acting in an agency capacity. It's holding money. As it says, the accounting is simple: assets equal liabilities. There's no net position. That means there's no additions or deductions from net position. There's tax agency funds and pass-through agency funds. So if there's one entity that collects taxes and holds it for another entity, that would be sort of like what happens here. For instance, I think there's a city and a state component to property taxes here in this, here if your business is in the city of Birmingham, but you only get one bill, and that one bill includes is payable to Jefferson County, but a portion of that is for city property taxes that they would hold in an agency account and remit to the city of Birmingham. Investment trust funds, these are external investment pools, and the assets are held for other governments along with funds of the sponsoring government. These have assets, liabilities, net positions, and changes in net positions, but it's to the equity of the that affects the equity of the external participants, and those are recorded in the fiduciary fund. Private purpose trust funds, these account for financial resources, again, in which the government is acting as a trustee in capacity for private individuals, organizations, or other governments. Pension trust funds, or any other type of trust funds, are funds that hold financial resources, account for financial resources, which the government is acting as a trustee for the employees of the government for when they retire. Again, the fiduciary accounting is similar to that for proprietary funds. They use accrual basis and focus on flows of economic resources. They do have capital assets and long-term liabilities if they're applicable. And additions and deductions are recorded instead of revenues and expenses, since it's not really kind of an income and expenditure type of fund. It's an agency fund by definition the government is holding for someone else. So those inflows and outflows don't need to be confused with income and expenses of the general government. And they only use two financial statements: a statement of net position or a balance sheet, and a statement of changes in fiduciary net position.